webinar. Mrin Agarwal from FinSafe India. Mrin, always good to have you on the show. Thank you for taking time out and talking to us today.
Thank you.
So first things first, I mean, January is when all the tax filing really picks up and people are in a flurry to sort of invest their money. They don't know what to do, where to spend, how to declare their income tax to their employers. So how should one go about it? Because from this year, we were told that the new income tax regime will become the default regime compared unless you opt out of it and you opt for the older one. So how are things different this time when it comes to filing your taxes and investing?
So first thing, let's just discuss about the old versus the new regime. So from this year onwards, the new regime is the default regime is the new regime. So unless you've made a specific declaration to your employer saying that I want to follow the old regime, in all
Yeah.
likelihood, it is a new regime on which basis the tax is going to be calculated by the employer on the salary. Now,
Hmm.
this is the season for submitting investment proofs, but mind you, the investment proofs are applicable primarily in the old regime, because when you look at the old regime versus the new regime, in the new regime, there are only two deductions allowed. One is the standard deduction of 50,000, and second is the employer contribution to NPS, right? And this is under section 80 CCD 2. So these are the only two deductions which are allowed under the new regime. When we
Hmm.
look at the old regime, you have a whole lot of deductions allowed, like, for example, section 80C, 80D, 80E, 80TTA, HRA, LTA, section 24. There are so many different sections under which you can claim deductions, but that's not true for the new regime. So if you have declared the new regime, then keep this in mind. One more question that I get a lot is saying that I actually wanted to declare the old regime, but I forgot to
Hmm.
do it. What do I do now? And the answer to that is that you don't need to worry, because as a salaried individual who's filing either ITR 1 or ITR 2, you have the option to choose the regime at the time of tax filing. So even if you've declared new regime, right now you cannot change that declaration, and your organization is not going to compute your taxable income based on the old regime. But at the time of tax filing in July, you can choose the
Hmm.
old regime. And of course, you'll have to then claim the TDS that has been deducted.
Okay, all right. But savings wise, the limits and the options, everything remains the same pretty much, right? In terms of how much we can save out of our salaries or our income.
Yes, pretty much the Section 80C is still limited to 1.5 lakhs. And of course, Section 80D, the maximum that is medical insurance premium paid towards self and dependents is also going to be up to the 1 lakh. And of course, on the parents, it depends upon the age of the parents that you can claim the deduction. So yes, pretty much the limits across, and the other big one, of course, is Section 24, which is to do for interest repayment on home loan, and that
Yeah.
also is limited to 2 lakh rupees.
Correct. Okay. So then, the most commonly asked question, I'm sure it's asked to you as well and to us very often, is how to save or what is the best way to invest in tax saving instruments when it comes to your hard earned money? Because not only do you want to reduce your tax liabilities, but you also want your savings to multiply or compound over the years. So right now, as the way things are, the way the market is, with the changing mindset and changing demographic, what is the best possible way to look at investing in tax saving instruments?
Well, I would say ELSS. And traditionally, if you see, people have always opted for insurance policies, the
Hmm.
investment linked insurance plans. Of course, the problem with those plans is that because of the costs associated, they don't end up even beating inflation. So while
Hmm.
it's being sold to you by somebody whom you know probably, or somebody who's in your office, the
Yeah.
point is that this is something that you really need to stay away from. Secondly, again, if you look at the traditional investments, like, for example, the 5-year tax saving fixed deposit or the public provident fund, also, even in
Hmm.
these cases, they do not really beat inflation. So, of course, PPF does But again, it's a limited return. So if you're looking at a combination of returns, uh,
Hmm.
as well as tax saving, then I think the equity linked saving schemes, which is the ELSS, which is a type of a mutual fund, is your best bet.
Okay, let's say I've put in I want to put in my money in ELSS. In fact, one of our viewers has also, Prem, has also sent us this question asking more on ELSS. How much of an exposure should one have, percentage wise or money wise? Because there are limitations to how much tax you can save after all.
Yeah, well, you can only save, while you can only save up to 1.5 lakhs every year, the point is that you can invest how much ever you want in the ELSS,
Hmm.
but your tax saving is going to be limited. So
Yeah.
I think the amount that you invest is really based upon your risk profile. What is the sort of risk that you want to take? How much of your ATC is actually available? Because in case of salaried employees, remember there would be the employee provident fund, right?
Yeah.
Combination of all these factors that is going to actually decide how much you're going to actually invest in the ELSS.
Hmm. Okay. In fact, he has a follow-up question as well, asking about Canara Robeco ELSS, if you could tell him about that. But not this one specifically, but if one has to look at ELSS, what are one of the best offerings that are out there in the market? Who are the best, providers that one can look at?
So, Karunya, I would say that one thing that I see very often is that people tend to choose a different ELSS fund every year, right?
Hmm.
And that per se is not like a very good strategy, because every year you don't want to have, like, I've seen people who have, like, five or six ELSS funds in their portfolio, right? And you actually don't
Hmm.
need that. All that you actually need is only one ELSS fund in your portfolio. So I think, the key in the ELSS is that firstly, you must remember that it is an equity fund. And given the fact that it's an equity fund, even if it has um, a 3-year lock-in, you must invest in it, keeping in mind at least a 7-year horizon, because it's an equity fund. Secondly, of course, look at the growth option, because dividends are going to be fully taxable. And third, look at the same ELSS. So you want to look at an ELSS that has been consistently performing over the long term, and not something that's given the best return in the last 1 year, right?
Hmm.
There are many ELSS funds out there. DSP is one of my personal favorites.
Okay, great. Ramesh is asking us about old regime versus new regime. What should he opt for? His annual income is 12.5 lakh.
See, the question of what you should opt for is totally dependent on your deductions. Now, there is a
Hmm.
calculator on the income tax website that you can access, and where they'll ask you your income and your deductions, and they'll tell you where you're paying lesser taxes. And
Hmm.
one more thing is that, while you can change the regime every year, I wouldn't recommend you to do that, because it's very difficult to keep a track of things, right? So what I would generally say is that if you have a high amount of deductions, for example, if you have Section 24 for interest paid on home loan, and then you're doing ATC as well, then in
Hmm.
all probability, the old regime is going to work out better for you given your income level. But please do use the calculator to figure this out.
Okay, all right. Let's talk about some common mistakes or faux pas rather that one makes. I must confess, as a complete fresher, even my peers were doing it, and I was aware that a lot of them were submitting fake rent receipts to save up on HRA, house rent income, or house rent allowance that they get as a component of their CTC. So, is it is there a penalty or a problem if one still continues to that practice wherein they're giving these fake receipts and perhaps they're actually paying rent or showing as though they're paying rent to their parents or family?
Yes, absolutely. And I think, we all should be aware that now,
Hmm.
with, AI and the AIS, both the things put together, I think, the days are gone where you could do all of this. And in any case, it's not a right thing to do, right?
Hmm.
So this year, I believe a very high number of tax notices have come to individuals who have given fake rent receipts, or the highest number of notices have come with respect to proving the HRA claim, right?
Hmm.
And a lot of them is stemming from rent receipts not being proper, right? So I would say that one, and I get asked this very often, that my landlord is not giving me the pan, or is not giving me a rent receipt, and what do I do? And what
Hmm.
I would always say is that whenever you are paying rent to anybody, whether it's an external person or even if you're paying it to your parents, two, three things you have to always keep in mind. One, that there should be a proper rental agreement, a stamped rental agreement. Two, there should be a proof that you have paid this rent to that person. So, for example, in rent to parents, ideally you should always do every transaction electronically, and really move away from cash transactions. I was surprised to know that cash transactions are still prevalent right now, but I would say try to do like give a check or do a online transfer to the landlord or the parent. Of course, you need to have the right rental receipts as well. So ensure, in a nutshell, just ensure that all the paperwork is in the correct order. And even
Hmm.
this whole aspect of rent to parents, you are allowed to do it, but all of this paperwork should be in order. And very importantly, if the parent is filing ITR, they need to be offering the rent receipt as income from house property. So follow all the rules correctly, and you won't have a problem.
Okay. In fact, what are the other documents and forms that we need to get our house in order before we are ready to file our ITR?
So of course, wherever there you have paid an interest, you need the interest certificate. Wherever you've earned an interest, like for example, fixed deposit bank account, you need the interest certificate, and it's very easy to get these from the banking portal itself. Coming to investments, you have capital gain statements, right?
Hmm.
And again, it's very easy to get capital gain statements these days, both from mutual funds and from your stockbroker for your stocks. For mutual funds, you can go to the website of the respective registrars, which is CAMS and Carby, and
Hmm.
request for a mail back. So it's like as simple as that. Of course, email ID has to be common across all your accounts, mutual fund accounts. So yeah, I mean, these are, and then of course, like think whatever claims you're making, you need to have all the bills against those claims, whether it is HRA or it is LTA, for example, or any
Hmm.
other allowance that the organization allows you. So basically, these are the documents, and specifically right now for investment proofs, again, you would need to provide the interest certificate for the home loans only. You would need to provide whatever investments you've done if you are claiming ATC, if you are under the old regime, right?
Hmm.
Contribution to NPS, for example, would be another one that you would need. Your premium receipt for the health insurance is another thing that you would actually need to provide to claim Section 80D. And in case if you have an education loan, for example, so again, like the interest certificate is what's going to be required.
Okay. All right. Some more questions have come in. Let me read out a few of them. Ravinder is asking for a 50 lakh home loan with a 35,000 EMI. How much can I show for tax saving? Any
Um,
ballpark idea that you can give? Because he's not talked about how much he's paying it, interest and how much is the principal.
Yeah, I mean, it's very difficult for me to do that because I don't know how old the loan is. But essentially, there are two things that you can do for tax saving out here. One, the principal repayment will come under Section ATC up to 1.5 lakhs. But please remember that if you already have employee provident fund or insurance premiums that you're claiming, so then it'll be, net of that. And of course, up to 2 lakh rupees, whatever interest you have paid on the home loan is also tax deductible.
Okay, all right. Overall, I mean, barring, of course, tax saving investments, Amrin, overall, this is a fresh new year. Typically, a lot of people reevaluate their finances and they look at, a fresh perspective. And of course, there's a lot of action happening in the market, a lot of volatility. It's an election year. There's budget coming by in a couple of weeks. What should one's investing strategy look like across different asset classes for 2024? What will be the big trends or the big, outliers as per your reading?
Well, I think we need to brace ourselves for a lot of volatility. All the good news that we had till the year end seems to be already, we started off, had a very sober start because of all the geopolitical tensions, which only seem to be increasing, right? If it was not enough to have two wars, now you have
Hmm.
stuff happening in Red Sea, and then now you have missiles being fired between countries. So, I mean,
Yeah.
there's a lot of stuff happening on the geopolitical side. Of course, inflation still when you look at the Fed commentary on interest rates, again, it's uncertain at this point how many rate cuts are really going to happen.
Hmm.
Of course, it doesn't look like the recession is coming, but then you also have elections in 40 countries, out of which two big countries like the US and India are having elections.
Yeah.
I think in the first half of the year, there's a lot of things happening domestically and around the globe as well, which could, of course, impact returns. And what I would say is that
Could it mean again gold could rally?
could be, but what I would actually say is that whatever investments you've made, please hold on to them, because one of the things that I see is that people are investing in small caps and mid caps based on this
Hmm.
30-40% return. And now if you're suddenly going to see a big downturn, it doesn't mean that you exit. So I think this year that the number one thing that you need is actually perseverance, right? And you need to be really strong to hold on to whatever you've
Yeah.
invested. Yeah, in terms of investing trends, it all depends upon how things work out. But certainly, debt looks quite good because interest rates have peaked out, and there is an expectation that interest rates are going to fall. So, from that perspective, from a 1 to 2 year perspective, of course, I think debt still continues to look good, because even if the fall doesn't happen, you're still
Hmm.
at very good yields at this point in time. So, I
Yeah.
would still say debt is a good option. I would think equity is going to be quite volatile, but you never know. We could have a surprise like 2023 as well.
Yeah. But the bottom line is say no to panic selling
Yeah.
across different assets.
Yes.
One last question before we wrap up. Mr. Bennett has asked us whether he should buy insurance through an agent or through his own online research and go on, those insurance aggregators and do his research and buy it. What do you think?
It really depends what's been your experience in buying insurance. If you feel that you can do your own research and figure out how much you need to buy, and what is the best policy for this, then it's okay. You can buy it directly. But if you feel that there's an agent who can help you out and answer all your questions, then that's also fine. Is he buying life or is he buying health insurance?
Hasn't mentioned.
Okay, so I mean, just a quick thing as
I
far as
think, but he has written LIC policy. I'm guessing it's term
it's
cover.
life. Yeah, yeah. So
Typically, it's synonymous with that. Yeah.
yeah, so life is just plain vanilla term cover. You can just buy it online, honestly.
Okay, great. Mrin, thank you for addressing our viewers' questions and talking to us about this very hot topic. I'm sure you're going to have a busy few weeks and months going forward as the tax filing nears. And we are going to tap you once again closer to the date to help our viewers out with their last minute chores and last minute filings. So thank you so much, Mrin. As always, pleasure to talk to you. And thank you for joining us and talking to the viewers of Sakshi.
Thank you, Karunya, for having me.
Thank you, guys, and have a great weekend, everyone.